Hello, everyone, and thank you for taking the time to review the real estate market analysis for Santa Clara County, California for July of 2009. My name is Robert Whitelaw, and I'm a licensed real estate broker in the state of California. I'm also a member of the National Association of Realtors and a certified E-Pro, and I'm also the president and CEO of Whitelaw & Sons Real Estate Services, serving all of Silicon Valley and sponsoring this market analysis. Now, let's go ahead and cover quickly the ways of getting in contact with me. If you'd like to visit my website, you can find that at www.soldbyrobert.com. There have been a couple of changes there, and you will find that if you subscribe to me via Twitter, all of my new posts, whether they're podcasts or video presentations, will be updated via Twitter now. So you can find me on Twitter using the screen name Rebel Broker. There will be a link on Sold by Robert to my Twitter page, so you can find it there as well. You'll also find articles I've written on real estate and other good info, and a great and multiple listing service search tool that works from all the way from San Francisco down to Monterey. So if you need to search for properties, you can find great tools for that there. If you'd like to contact me via email, just send those to robert@soldbyrobert.com. If you prefer to talk live on the phone, you can just dial 408-852-0525. If you prefer to talk to me online using any instant messaging software like AOL Instant Messenger, Google Talk, or Yahoo IM, just use the screen name The Rebel Broker. My Skype name is Rebel Broker, and of course, referrals are always appreciated. If you or anyone you know is interested in buying, selling, or investing in real estate in Silicon Valley, please feel free to give me a call. I'll be happy to help any way I can. Or if you are not anywhere near Silicon Valley, but you're still interested in buying, selling, or investing in real estate, I can go through the process of interviewing agents and find the one perfect for you and your needs. So go ahead and get in touch using any of the methods outlined above, and I'll be happy to help you no matter what your real estate needs are. Okay, now that we have that out of the way, let's jump into the supply and demand numbers. Now, this is another encouraging month. Now, I talked about before, at least in the smaller communities, what constitutes good news and what doesn't constitute good news. Now, because we have such a large sample of data for Santa Clara County, whenever we see month-to-month data, that's a really good place. So if you're someone who lives in Santa Clara County, or just interested in Silicon Valley or Santa Clara County real estate, the countywide numbers are usually a good way to at least get some sort of a measure of what's really going on, because just the numbers are bigger. So when I do these presentations for Morgan Hill, Los Gatos, and other communities, the numbers of homes that get sold in those areas is so much smaller that sometimes it can be misleading. So in those cases, we need 3 or 4 months worth of data for us to determine whether or not a trend is going on. It's a lot easier to determine that when we're dealing with Santa Clara County. But what's really exciting about the numbers we're seeing is, and we'll see it coming up here in another couple of slides, but it doesn't take as much continuity or as many months of repetition for us to determine whether or not we have a real trend happening in the county in general. And we've seen some good numbers. Now let's go ahead and jump into it. I'll stop narrating here and just sort of get right into the numbers for you. Now the first thing we're going to look at is the number of homes that are in inventory. And you can see, of course, that is really the dramatic drop here. We now have inventory numbers that are on par with what we saw in 2006 when the market was a lot healthier. Now, interestingly, look at the relationship between the number of homes that sold and the inventory between 2006 and 2009. We have sold more homes in 2009 in the month of July than we did in July of 2006, and we have a lower inventory. So from the standpoint of the ratio, which I talk about frequently, we're actually doing better than we were doing back before the market really started to go bad. Now, 2006, many would argue, and I would agree with most, that 2006 was the first year we started to see any signs of weirdness, because if you look back at 2005 and 2004, you can see inventory numbers. We had less than a 1-to-1 relationship between number of homes that were selling and number of homes as far as the ratio, right? We had half the number of homes on inventory were getting sold every month, which was amazing. And I would really call that the peak. Now, as far as inventory numbers are concerned for inventory is down 37.57%. That is, and this is a whopping number, this is 2,345 fewer homes on the market than were on the market last year. And that's a dramatic drop. It's exactly what we needed in this marketplace to get things going a little bit more normally. Now, that gave us a grand total of 3,896 homes on the market in July of 2009. So that's a great news for Santa Clara County. Now let's go ahead and take a look at the sales, because that's also been an excellent, everything on here on a year-to-year comparison is good news. And this is actually not the first month we've seen this trend, but the sales are also up 44.64%. In July of 2009, we sold 400 more homes than we did in July of 2008. So that's fantastic news. And that gave us a grand total of 1,296 homes sold. And that ratio between inventory and solds is fantastic. But before we get into that, let's cover how many homes were listed. Now, this is the number of homes that were added to the market during the month. Now, that number is down 23.4%, so 500 fewer homes were listed in the month of July in 2009 and then the same month last year in 2008. That gave us 1,637 homes that were listed in July of 2009. Now, all of that, as I said, fantastic news. Let's go ahead and jump in and take a look at the ratio. We've been heading in the right direction now for several months with Santa Clara County. It's been going down and down and down. And now we are at what I would call an absolutely healthy point. If we could maintain it here as far as a solds versus inventory perspective, we are in what I think is a very healthy place. Excuse me. And there's two ways of looking at this number. One, excuse me. One is how many months of inventory do we have on hand? Another way is looking at it as a sort of a seller competition number. But first, let's talk about what that number is. It stands at 3.01. So basically, we have 3 months of inventory. If everything froze as it is right now, it would take us 3 months to sell off all the inventory. Now, that's great news. Of course, July is supposed to be one of our peak months, so we're supposed to get good numbers. But remember, this chart we're looking at is only the month of July. And this is the best July we've had in Santa Clara County since 2005. No doubt about it. So that's excellent news. Now, we compare this to last month. Last month, this number stood at 3.45. So we've dropped almost a half in just 1 month. And that's great news. So for sellers, what does this mean? Well, it means that you have a lot less competition in general in Santa Clara County. For every home that sells, there's about 3 on the market. That's pretty healthy. It's not a place where buyers have to make an offer on everything that they see in order to even have any hopes of getting a home. It doesn't feed into a buying frenzy, which blew prices out of the roof before. It's really, I think, a very healthy place. So that's really good news for Santa Clara County. Keep in mind, though, that as I've talked about before, Santa Clara County is made up of a lot of micro markets that are very different. If you reviewed last year's numbers, or last week's numbers, excuse me, for any other communities, you know that Los Gatos, Almaden Valley, Morgan Hill, all these areas perform very differently from the county in general. So if you're looking to make any decisions relating to your personal real estate needs, make sure you're getting data that relates to the home you want to sell or the area where you're interested in buying, because it may be quite different from the impression you might get from these numbers. Okay, now let's go ahead and look at the same numbers, but this time just going straight back. We're not skipping months now. We're not just looking at the month of July. We're looking all the way back to January of 2008 to see if we can spot any trends that could help us in the future, or, as I've mentioned in past months, are we in a pivotal year for the market? In other words, we're seeing a change in just the general way things are working. Now, if we look at inventory numbers, and we see that we've had a steady decline in inventory since March, and that's pretty good. That's a good thing. If we look at last year at July, you can see that we really saw the opposite. We actually saw inventory numbers rising up to meet July. So that would indicate to me that we are in a pivotal year. We're not seeing things mirroring what happened last year, at least as far as inventory numbers are concerned. So can we draw any information from what we're seeing compared to last year? Well, last year, after we hit July, inventory numbers tended to decrease as we headed into winter. Now, for seasonal reasons, I would agree that we will continue to see inventory numbers drop as we head into October, November, and December. And because of the sales I've seen and the fact that I don't really see an end in sight, and because short sales and foreclosures, while they're still a good chunk of the market, aren't the dominant aspect of the market, I think we're going to continue to see inventory numbers drop, and I think that's going to be a good thing for the market in general. And you can see, on average, inventory numbers are dropping when we average out all the numbers over past months as well. Now, between June and July of 2009, the inventory dropped 5.09%. That's 209 fewer homes on the inventory just from June to July, so a lot of homes getting sold there with fewer homes being put back on the market to refill that, so that's giving us our drop in inventory. Now let's go ahead and take a look at how many homes have sold. That's actually up 9% from last month, so between June and July we had a 9% increase in sales. We sold 107 more homes this month than last month. Again, that's good news, and as you can see, the averaging bar there shows us that sales are just in general on the rise, which just serves to validate the year-to-year comparison of data, so that we don't just see that we're comparing two years that just happen to be very different from each other. Okay, and then the number of homes that listed, we saw that increase 4.87% between June and July. That's fairly normal for this time of year. If we look at last year in July, you can see there was a little bit of a peak there as well. July is usually that last month when people might throw their house on the market to try and take advantage of what's going on with the market in the summertime months. People usually want to be in their homes by the end of August or September for school. So usually that's the last time we see an increase in listings, just because that tends to be the rhythm of the year. All right, now let's go ahead and discuss the short sale and foreclosure situation. We'll go ahead and start with what's going on this month. And short sales made up 13% of the market. Foreclosures made up 27%. Conventional sales made up 60%. So conventional sales have steadily been overtaking the short sale foreclosure market as far as what percentage of the market it makes up. When we compare that to last month, you can see that we've decreased the number of foreclosures. The number of short sales has stayed pretty much the same as a percentage of the marketplace, while conventional has obviously then taken up the slack and accounted for more of the homes that are selling in the county in general. Now, if you want to get a little bit more insight to what's going on with short sales and foreclosures and some potential problems that might be around the corner with this segment of the market, let me suggest you listen to one of my podcasts that I've done. I've got several out there relating to foreclosures, but there's a real concern that we're going to see a big surge in foreclosures later in the year or next year, simply because we're holding off on foreclosing on so many homes that are ultimately just going to end up that way. And it's sort of an artificial delay to a lot of foreclosures that I don't think is really going to help the market in the long run. So this is all, again, I think this is good news. When we see conventional transactions taking 60% of the market, I think that's good. We'll see how this goes forward. But there's also some interesting statistics on areas that don't have a lot of short sales are seeing lower sales. It seems like buyer attention is still very much drawn to regions where short sales and foreclosures are happening. But then what we see is that buyers end up buying non-foreclosure and short sale properties in those areas, probably due to the delays involved in short sales and foreclosures or the frustrations that are often associated with those. So they just end up buying something that was in the same area where they were shopping for a short sale or foreclosure. And that's having both positive and negative effects on the market. And again, I discussed that in more detail in some of my podcasts if you'd like to go review those. All right, home prices. Where are we going with these? As you can see, it's been a pretty steady drop since 2007 for Santa Clara County. The average sales price in Santa Clara County was $713,221. Where did we drop here? Change from last year, down 19.56%. That's a $173,415 drop. So that's not horrible. There's some areas that have a bigger drop in average sales price. Some have less. And I think that's given what's happened in the market. It's not great that we've seen such drops from nearly $1 million all the way down to about $7.25. But the bottom line is that's really what needed to happen in order for this market to get healthy again. Now let's go ahead and talk a little bit about some of the highest and lowest priced homes. There's actually some interesting information to get from this one. The highest priced home that sold in the month of July was in Los Altos Hills. And that was at 12590 Miraloma Way. It sold for $3,024,076. I'm not sure how they ended up with $76 on the end of a $3 million purchase. Now, it originally listed for $4,350,000, but it was only on the market for 9 days. This is a good example of deals being taken at the high end, and I realize that for most folks, spending $3 million on a house doesn't sound like much of a deal. But let me tell you how much this home sold for in 2007. It last sold in 2007 for $6,300,000. And this is really an amazing property. It's more of an estate than it is just a home. But if you think about it, this person basically got a $3 million discount off of what was paid for this property just 2 years ago. A $3 million discount. So basically 50% off. So obviously a bigger discount taken on that higher end than we've seen on average in Santa Clara County. Now, the lowest priced home was in Gilroy at 7520 Alexander Street, and that home sold for $111,000. It listed for the same amount, and it was only on the market for 14 days. That was a bank-owned property, and it was sold as is. And the last time that property sold was in 2001, and it sold for $285,000 at that time. So this is another one of those situations where these folks had to take more than half off what it was purchased for in 2001 in order for this property to sell. And we're seeing the two extreme examples here with the high and the end. Los Altos Hills, some great deals are being able to be taken there. Gilroy, because it was seen as a bedroom community for Santa Clara County for a long time, for folks working in sort of the heart of Silicon Valley. But since deals have really gotten to be so good, so much closer to San Jose, they've really suffered, and that's been one of the most hard-hit communities in the county. All right, let's see if we go on now to home prices just over past months. Let's see what kind of a trend we see there. And this is what's great about Santa Clara County. We get so many solds per month that this data does not go crazy on you usually, unless something very extreme happens, because in order to overcome the vast majority of data, you'd have to have some very big numbers change that. And you can see the trend here has been pretty hard to ignore. A dramatic drop all the way until January, February of 2009. And then since then, we have had a pretty regular increase in average sales price. A lot of that seems to fit in with the shift from a foreclosure-dominated market to conventional sales taking on more of the bulk of the homes that have been getting sold. Now, as I said, the average sales price this month was $713,221. The change from last month, so from June to July, we saw prices increase 3.59%. That's a $24,737 increase month to month. Now, don't take this data to mean that if your property is in Santa Clara County, you now need to change the asking price for your property by $24,000. As I've said before, this all really comes down to your local markets. There are some areas where if you really want to get your home sold, you need to lower your price, and there's some areas where you could probably afford to ask more. But again, you need to talk to a real estate person and find out how things are performing in your local market. All right, let's go ahead and take a look at days on market, see how long it's taking for things to get sold. You can see that in 2009, we had, where did that number actually sit here? We actually saw a 6.76% between 2008 and 2009. The days on market was really about 79 days. That's 5 more days to get a home sold this year than the same time last year. But look at the slowing of the rate. You'll notice just a dramatic increase between 2005 to 2008. Each year, a pretty dramatic increase. This year, not so much. It has dramatically slowed down. It looks like we're peaking. Now, is this a realistic number for you to use? Is this a realistic number for you to use on trying to figure out how long it's going to take you to get your property sold? Yeah, it actually is. It's a number that I think reflects the real situation in the market. I think that what you need to do as a seller is calibrate yourself to the fact that it's going to take you about 80 to 90 days to get your home sold in general. Now, of course, this is all going to be a factor of your local markets. There are going to be some markets where that's not the case, where really that you really need to look at your local market and find out how long it's going to take you to get something sold. There are some markets here in Santa Clara County where I think the realistic expectation is closer to 110 days. So make sure and calibrate yourself to what your local market is doing. All right, now the days on market just in past months. We'll go ahead and take a look and see what the trend has been. It has been relatively flat up until August of last year, and then we started to see some peaking out. A lot of that had to do with we just started to sell more properties. Now we got some increased sales right around January and February, which got rid of some old stock of properties. So we saw a little bit of a boost there in days on market. But now that number has dropped substantially, and I think that we're heading more into a zone where it's going to be a little bit easier to get your property sold. You can look to realistically get that property sold in 30 to 90 days, and I think that's really where a healthy market sits. Now, between June and July, we had an 11.24 decrease in the amount of time it was taking to get a home sold. That's about 10 days less than the previous month, than in June. Now, I do appreciate you taking the time to listen to what I have to say on these subjects. I'm not going to waste your time by reading all of these off again. I just thought here at the end of the presentation, I'd give you all of the ways to contact me one more time. Again, if you'd like to go and visit my website, you can find a variety of ways to keep track of what I'm putting out there. If you'd like just one easy way to track what I'm producing as far as podcasts, videos, and articles, probably subscribing to my Twitter is a great way to do that. Another way would be to simply subscribe to the RSS feed from my website. Again, thank you all for listening, and I will talk to you all next time.